Everything in this video is not intended as financial investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. And let's take a look at the midweek market update. Happy tax day for those of you in the US, which may or may not have interesting implications on bank deposits. I'll look at that in a second. We'll start with the usual here until it's no longer a factor, inflation in the United States, which continues to hover around 4% based on real-time data estimates. Certainly the CPI was 5% on the last print, and across the pond in the UK, the real-time inflation data has come down, but does not appear to be anywhere near in an acceptable range. Also worth keeping an eye on this sort of thing because of DXY and because of a relative difference between our central bank in the United States holding rates at 5 and 5 1/4, which that's what looks like is going to happen, versus the Eurozone, which may need to continue raising, despite language over there that things seem to be fine. Based on the data, doesn't quite seem like that. Looking at the Fed Fund futures probabilities, not much has changed week over week. Next meeting is still quite a ways out, and it looks like the 25 basis point hikes slowly being baked into the probabilities here higher and higher. And we're even baking in, this basically a hold at this level for many months, which I think by most sides of the debate is a pretty reasonable thing to do, considering CPI would likely then be lower, slightly lower than Fed Fund futures. Now, not everybody on the Fed is on that wavelength, as Bullard is saying, we're not going to have a recession, everything's going to be fine, and he wants more hikes. So we'll see what happens. No one is more hawkish usually than Jay Powell, and he ultimately has the final say. But Bullard is also historically extremely hawkish. It's just funny, his name is Bullard, but he's bullish on rates, I guess. Looking at bank deposits real quick, we sort of get this data like 1 week back, so this is last week's data at this point. But if we look at BTFP, which is the new program that just got added to the ecosystem after the SVB collapse, it looks like it is being utilized pretty significantly here, along with the discount window. That BTFP program allows the bank to give collateral that qualifies as collateral. That's the most important thing. So immediately that sort of chooses the winners and losers, because if you are a bank who's in trouble and you do not have the collateral that's accepted through this program, you're kind of left out in the cold. So in any event, we are seeing banks use this and take it up, and that may be why we are seeing bank deposits sort of reverse course here. 61 billion. This was in the week ending in April 5th. So it does look like some of that is helping to shore up, the BTFP is helping to shore up these bank deposits. Now there is an interesting data point that around tax day, about 250 billion leaves bank deposits. So we'll see what this looks like, basically in a few weeks from now as this data finally catches up, because it's a few weeks back. But we may see some interesting sloshing around. We may see an uptick in BTFP, that sort of thing, something to keep an eye on. Meanwhile, S&P land, things look extremely bullish. If you look globally, the Eurozone stocks, the DAX, or I forget the other name, top 600, it's effectively back at all-time highs. They're pushing all-time highs. The Asian indices doing extremely well. Some of that bullishness overnight is certainly propping up crypto or helping to keep crypto at highs, especially BTC. So on technicals, things look fine. Even if you look at the ultimate doomer fractal, the 2008 fractal, there's really nothing to be worried about here until we start making lower lows. And, that's where there be dragons, because below 3850 is a new lower low, I guess 3800. But in the meantime, you'd say, well, we're trendless. We're not like mega bullish here. There's no bullish momentum per se, as we're just chopping around. But we are where we need to be to start something in the bullish side of things. And again, if this is a pattern here, it would measure out to 4,500, something like that, which may or may not have any basis in reality, but that's what the TA is signaling. Looking at the DXY, again, important. It feels like most of these charts, SPX, DXY, Bitcoin, gold, they're all sort of at horizontal levels and sort of waiting for someone to make the first move. Maybe it's going to be DXY. Maybe DXY breaking 100 will be what it takes. Maybe DXY retracing to 105. Whatever this happens here, and that may not actually move until the next meeting, right? Maybe when we start to see forward guidance from the Fed on the 3rd of May. So this could continue to take just its sweet old time, and DXY doesn't usually move quickly anyway. But again, this continues to signal bearishness. Not much has changed there week over week. It would be appropriate based on the TA to continue to pull back here. Perfectly reasonable. So again, it does feel like all of these charts are sort of waiting to see what happens. And I think DXY is going to lead the charge there one way or the other. Gold almost hit an all-time high last week. And again, it's just in crypto land, macro land, it's something worth paying attention to, certainly. This range measures to 2,300, 2,400, something like that. Another slow mover, but if gold starts to turn bullish, I believe that would be good for crypto as well. Moving on to crypto, we've had a deluge of more regulatory enforcement actions, language, this time against Bittrex. Sort of an older exchange. Probably at this point, not many people have heard of Bittrex or used Bittrex in the United States, certainly. Bittrex previously already sort of split in between US exchange and an international exchange. And that sort of behavior and posture from centralized exchanges has slowly but surely trickled into decentralized exchanges. I'll talk about that in a second. But Bittrex getting targeted here with unregistered exchange, unregistered securities offerings, trading them, that sort of thing. Specifically, the complaint mentions 6 coins, 3 of which I'd never even heard of, DAX, OMG, and Algorand, the 3 that I had heard of. But in any event, it does appear like there is no stopping on the regulatory side of things from the SEC. And based on what happened in 2022, you or I may not like or understand all of these regulations, but I think it's very appropriate to see where they're coming from, considering what happened in 2022 with FTX. Today, Gary Gensler was in front of the House or Senate, I can't remember, House here, sorry, and he got grilled on crypto by Tom Emmer. You can check out his tweet storm on Twitter, all the questions he was asked. So we do have some allies in Congress who are trying to fight for us in the digital asset space. But meanwhile, again, this is sort of catching up on headlines here. This is a last month headline, but all of DeFi will be targeted. There's no doubt in my mind. Even when I was Googling around for this sort of thing, I was reminded of Uniswap that was hit with SEC inquiries in 2021. Sushi is basically a Uniswap clone. We've got Coinbase, which is a centralized exchange, obviously, but Brian Armstrong saying, look, we'll just move out of the United States. And that's certainly one way to play this from a business perspective. Not something as a U.S. citizen I like to see. But at the end of the day, this is what many exchanges have already done. This is certainly what DEXs are starting to do and have done. So it doesn't come as a surprise for him to say this out loud, but hopefully it doesn't come to that, certainly. And then you've got, New York with the BitLicense, and they're continuing to hammer down on their regulatory enforcement actions. This is BitPay, which is a transaction processor, hit with $1 million fine. So regulators are still extremely active. And I'm going to assume, not that I talk to a lot of TradFi individuals, but I'm going to assume that seeing all these headlines about regulation is helpful to some degree, because it doesn't look like it's an unregulated wild, wild west anymore, which it hasn't really been for some time, quite some years now, but obviously FTX really changed that landscape. This was earlier this month. Now I'm talking about DEXs, DYDX, which is a derivatives exchange in DeFi, closing off slowly to Canadian users. I think there's some limited availability to US users as well. So the idea, the dream of DeFi is certainly at risk here, because you'll have DEXs. This is a DEX on Solana called Orca, and it'll just say unavailable in your country. What they do is they look at your IP address, where your internet is coming from, and they will block you from the ability to trade. And as an American, then you just go to the next one, right? We go to Matcha, which is on ZRX. It's a DEX aggregator. And eventually, you can just go down the line here. There are plenty of DEXs out there still that will tolerate US users, we'll put it like that. But it's very easy to use any of these and trade many things that aren't available necessarily on centralized exchanges. It's also kind of interesting that the font here looks a lot like Coinbase does. And if we look at another sort of indicator of onshore, offshore, we'll say attitude and sentiment, we can look at stablecoin circulating supplies, Tether in the orange, USDC in the yellow here. Tether has always been more offshore related. I'd say less DeFi friendly, but certainly that's grown significantly. USDC was really the DeFi darling, and that continues to drop off as far as circulating supply. And I think this is a message just based on sentiment. If you are offshore, it doesn't mean you're doing anything illegal. It doesn't mean you're a criminal. It just means who would you rather tolerate or deal with as your stablecoin? And it seems to me like that is Tether and not USDC. USDC certainly more associated with the United States specifically. BUSD down here will only go to 0. They can no longer issue anything. And then DAI here's a decentralized stablecoin in quotes. They're heavy quotes because most of their collateral is actually USDC. So they're effectively USDC adjacent, we'll put it like that. But Tether the clear winner here after all of the banking issues we've had, after all the regulations that we're being slammed with. And I think a lot of it is the SEC playing catch up, but they also need to be careful here to make common sense regulations that don't just push every exchange or user just out of the country, right? Because at the end of the day, people will vote for it with their feet and just leave entirely. And if we look at DeFi again, there's been this idea of permissioned pools, right? And this is sort of where things are headed, where you're geo-fenced or you're ring-fenced or you're allowed to interact with fully KYC'd, fully onboarded entities that all know each other, that are all legally on the up and up, right? This is from 2018, okay? 0x was talking about this. So this isn't anything new, and it's certainly available on places like Maple, which is a DeFi lending service. Fireblocks has some permissioned DeFi activity. So this is really where DeFi is headed. Unfortunately, in the United States, from my vantage point, it's only going to continue. The dominoes are going to keep falling for most of these decentralized exchanges. Now, we also have Avalanche, which is allowing institutions, they just launched this Spruce testnet. They're allowing institutions to sort of play in the sandbox of DeFi and see what it's all about and play around with tokenized offerings, that sort of thing. So we're certainly headed in the right direction in that we are bringing DeFi into TradFi, right? The question is it going to be the DeFi that we know of today? I don't think it is. I think it's going to be heavily permissioned and regulated, at least onshore in the United States. So I think overall things are moving in the right direction. It's just going to be a very painful transition period for a lot of people who rely on decentralized exchanges in the United States. On the topic of Avalanche, they have seen a pretty substantial rise in transactions. Now they have 3 chains on Avalanche, 3 main chains: C chain, X chain, and P chain. The C chain is basically an EVM, which means it's compatible with Ethereum, and essentially is another version of Ethereum on Avalanche. The subnets, the separate chains, are not connected to the C chain. So we're seeing activity on the C chain specifically, basically double on the transaction side of things. We're seeing active addresses also double. So we're seeing activity slowly come back to Avalanche on the C chain. And if we look at prices for Avalanche, sort of mixing the on-chain and TA analysis here, very much like Bitcoin, like Ethereum, we're seeing Avalanche back at local highs here, back at the top of the range, printing this inverted head and shoulders type fractal. Volume is coming back here. So we're starting to see money rotate around into AVAX, into Sol, into DOT, into Matic, sort of down the market cap table as Bitcoin, as Ethereum start to hit a range. So it's certainly healthy for Bitcoin here if we remain in a range for around a month. That's typically, historically been an acceptable consolidation period to let us move higher without immediately getting smacked back down. So in that period of time, we may see alts with actual real deal activity on their chains do well. AVAX, I think, is one of those. Moving to Ethereum, we're also seeing activity slowly come back, right? It isn't like gangbusters amazing here, but we are seeing rises in on-chain activity, active addresses, transaction counts. ETH now post proof of stake unlock. We can analyze that 6 ways to Sunday as well. We can look at all of the inflows and outflows. Are people staking after staking is unlocked? Are people restaking the coins that they've unlocked? Are exchanges bleeding ETH? Is it going elsewhere, which they are, centralized exchanges? We can look at the principal versus the rewards. The principal is the validator, the 32 ETH. The rewards are anything above 32 ETH. Most people, even based on the data here, are just removing their rewards from these validators. You basically harvest your rewards, you roll it into another validator, and that's an option. Or you harvest your rewards and you sell it, and you have this sort of perpetual yield on the base validator. Most of this principal that has been unlocked has been from Kraken, who, after being enforced by the SEC, has to unravel all of their staking for US users. The next sort of shoot a drop here from the unraveling of staked ETH is Lido. They have sort of tiered withdrawals for ETH based on how much ETH you have staked. And we can look at Nansen now. Sort of see waiting for withdrawal is mostly Kraken, Binance, Coinbase, not yet Lido. So that's still coming down the pipe. All-time withdrawn, Lido's up there, Kraken, right? So the initial salvo, the initial burst of the Lido related, Lido's a decentralized staking service. The initial burst of that has been released, and over the next 30 to 60 days, we're going to see bigger ETH potentially move out of the ecosystem. So we can see there's around 925,000 ETH waiting to exit. It takes almost a business week now to fully remove. So this is going to be a slow process, and we'll see waves of this depending on when ETH gets unlocked from exchanges. So not quite over yet, not quite out of the woods for ETH price based on a supply unlock perspective. Again, the healthiest thing for ETH here is just to remain in the range. We don't need anything explosive on price. We know ETH is getting unlocked. We know ETH is moving around. People likely selling some of their ETH. All in all, trend metrics look great for ETH here. Broke out of a multi-month range. It's almost at a yearly high. And if we measure just this range higher, 25, 2600, certainly reasonable. Finally, starting to mimic the end of this Wyckoffean markup phase is what this would be considered after the Wyckoffean accumulation for many, many months. So from a TA perspective, this is exactly what you want to see. And looking at BTC and ETH on exchanges, BTC in the green here, pretty much held flat since the beginning of the year. But ETH continues to just leave exchanges. And, there's going to be a time eventually when the ETH price is either high enough or low enough to bring ETH back to exchanges. But unless you're actively trading ETH, there's really no reason to leave it on an exchange, sitting on an exchange, much like a bank account and a savings account and versus a money market account, right? We're seeing bank deposits leave banks because of the yield that you can get in a money market account. And the same thing is effectively happening here with ETH. We're seeing ETH leave exchanges because you can get that yield through staking. So there's really no reason, if you're a holder, to just let your ETH sit on exchanges anymore. It's going to be interesting to see what happens when prices start to go higher or lower, and if that ETH does come back to the exchanges. But right now, sentiment very clearly to me is continuing to remove ETH from exchanges. Some Bitcoin on-chain activity real quick. Transactions continuing to rise, nearing the top tier of historic transactional activity on the chain. Active addresses also rising a little bit slower here. But this is what we want to see if we expect continued bullish rally. 2016, 2017, we saw growth with on-chain activity continuously along with price. So that's certainly what we need to see. From a technical perspective, we've ranged here for about a week. Very choppy. Things I'm watching are this TKC clamp here on the cloud. I'm watching the 200 daily moving average, 20 weekly moving average. As violent as a retrace to these levels would be, historically, we get retraces to these levels. We just had one, right? It may be too early to expect a retracement all the way down here, but a retracement to 25K, certainly possible here. We're hitting some old resistance at 30, 31. And again, we could just range here for a month. That would be totally fine and certainly healthy. That lets the sellers sell, the buyers buy. That's what you need with continuous rallies on the way up here. And on the lower time frames, you can just see how much chop we've had. Pretty impressive rally overnight, but we've reached this short-term ascending triangle target and started to pull back from that, and now we're maintaining this new consolidation zone. So all in all, things looking pretty good with ETH, with BTC, with a few alts, and some TradFi indices and gold at key levels here, sort of waiting for the other to make the first move. That's all I have for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.